If you guys want to make real money, I think right now is one of the most important times to open your eyes to see what's really happening in the market right now. One of the biggest opportunities, which is one of the ways that I turned my portfolio from $0 4 years ago to over $670,000 in 4 years. One of the biggest things that are happening right now, one of the biggest financial shifts in the stock market is happening right now, and no one's paying attention. And it all comes down to one thing. It's interest rates. Now, what do you do with the interest rates? Check this out right here. This line right here is the NASDAQ Triple Q. It's been pumping all year long. Check out the Triple Q right here. We'll put on a 5-year chart, just pumping nonstop. And the one that everyone is eventually going to realize that they need to rotate into is the IWM. This is a Russell Small Cap 2000. This is a 5-year chart also. It's been flat. It's waiting to explode. But something big just happened where the inflation data came in a little bit softer than expected, and there's a lot more rate cuts that are now being projected to happen. So here's what you need to know. This is a 5-day chart. Right here is the biggest divergence that we have seen in years. People going out of Triple Q, selling out of the NASDAQ, and buying into the Russell. Massive divergence right here. So here's what's going on, okay? The Russell 2000 is basically the small 2,000 companies that are pretty much a lot of startups and high-risk companies, but a lot of them are very good companies, but they don't function well in a high interest rate environment. The reason why is because large companies like Apple, they don't really have to borrow a lot of money because they have billions and billions of dollars on their balance sheets. So they could either use that money to fund their operations, their expansion, their research and development, or they could just take that $100 billion and invest it and get 5% in a treasury bill short term. The problem with small caps is they're new companies. They don't have hundreds of billions of dollars to invest, so they have to go borrow money in order to try to grow their business. So the problem with borrowing money right now is interest rates are high. But if we head over to this chart right over here, interest rates right now are 5.25 to 5.5%, okay? This looks kind of like there's a lot going on here, but just bear with me. So right now it's 2024. They're projecting that in December, it's gonna be 4.6%, okay? We're at 5.25 to 5.5 right now. Let's just say we're 5.5 to keep things simple. We're projecting almost a 1% interest rate drop by the end of this year, okay? And then 2025, almost another, it is 1% drop in 2025. And then in 2026, almost another 1% drop. So what this is gonna do is all these small cap companies that have been getting killed right now because interest rates are so high, they're gonna be so ready to invest because they could go borrow money at such cheaper rates. So this right here is the CME Fed Watch Tool. Right now, we're at 5.25 to 5.5% on the interest rates. Across the top right here is all the Federal Reserve meetings that are upcoming. So this is a July meeting. So this is saying that there's a 93.8% chance that the rates are gonna be 5.25 to 5.5% at the July meeting. This is currently what we're at. So they're projecting in no rate cuts at the July meeting. There's a 6% chance of rate cuts at the July meeting. But going into September, check this out. There's a 90% chance that we're gonna drop by 25 basis points, which is 0.25%, okay? Going out to November, there's another chance that we're gonna drop, 50% chance we're gonna drop to 4.75 to 5%. So they're pricing in a lot more interest rate cuts. And I mean, even if let's go out roughly a year out. I mean, they're saying that rates are going to be roughly between 3.75 and 4.25%, which is a whole solid percent plus below where we're at right now. So what's going to happen is these small cap companies are going to be able to borrow money cheaper, expand their operations, and make a lot more money than what they're making right now. So this is a very important chart right here. This is the performance of small cap, mid cap, and large cap stocks after the first rate cut, okay? First rate cut. So the first rate cut, 3 months after, small caps 10.9, mid caps 9.2, large caps 5.6. But check out this 12-month return. So if we cut rates in roughly 2 months from now, we would expect that the small cap, which is the IWM Russell 2000, is going to go up 26% versus the Triple Q or the S&P 500 is going to do roughly 15%. So that is a huge divergence of returns. So that's something that we need to focus on. And this is why I think this is one of the biggest opportunities right now, because if we start buying into the IWM, which actually I did, I'll show you this trade that I made right here. I bought 10 call options on IWM at a 220 strike price for 620 of 2025. Okay, so this is a bet where you can make $100,000 on, because this is a 220 strike. Okay, the price of IWM right now is 213, so I'm only out of the money by $7 a share. But what you need to understand is I have 10 call contracts, which means I'm in control of 1,000 shares. Okay, so every dollar that this goes up in price, because I have 1,000 shares that I'm in control of, I make $1,000. So if this goes up $10, I make $10,000. So based on this chart right here, most of the time it's going to go up 26.6%. I mean, 26% on something that's $213, that's over $50 a share. I can make a quick $50,000 with minimal risk, because look at how long it's been consolidating for. And another thing is the P/E ratio right now on the Russell 2000 is 14. P/E ratio of 14 is crazy cheap, because these are basically trading like the valuations of like bank stocks. So the triple Q, the Nasdaq's probably trading at a P/E ratio of like 35, the S&P 500 is at 25, and this is 14. So I think, which I could be wrong, this is not financial advice, but the Nasdaq's been pumping hard. This is the triple Q, okay? IWM has just been staying flat, and it's ready. It's just waiting for interest rates to start falling. And right when we got the inflation report where it's softer than expected, and then they're pricing in a higher chance of interest rate cuts, bang, people are starting the rotation right here. It's happening in real time. This right here, July 10th, was the first move of rotation from triple Q into the IWM. So this is just getting started, I think. And I think that going forward, if you want to buy call options or just buy the share straight up, you can make a lot of money. Nothing is guaranteed. I could be completely wrong, but this is the bet that I'm willing to make. And making bets like this is how you convert your portfolio from zero to over $600,000 in 4 years. You have to make a couple big bets. And when you do that, you'll do good in the long haul.